Can you imagine this? The energy consumption of Bitcoin mining across the globe surpasses that of entire countries. Hard to believe, isn't it? Ever since its birth 2009, Bitcoin mining has embarked on a journey marked by unbelievable expansion. Resembling the famous gold of the 1800s, this digital gold rush has attracted an increasing number of miners, all in pursuit of this valuable digital asset. As the worth of Bitcoin soars, the scope of Bitcoin mining operations does too. These operations have expanded beyond the boundaries of personal computers to gigantic, electricity-devouring data centers stretching across vast areas. The sheer energy usage of these centers accentuates the colossal scale of Bitcoin mining in the present day. Isn't it astonishing to see the pace at which we've progressed? From being a hobby to transforming into an industry that competes with entire nations, the evolution of Bitcoin mining has been nothing less than phenomenal. What do the experts say about this digital gold rush? Let's find out. Opinions on Bitcoin mining differ greatly among the industry's notable figures. Some see it as a lucrative endeavor, while others caution against its potential pitfalls. Let's explore what they have to say. Renowned billionaire investor Tim Draper sees Bitcoin mining as the future of finance. According to him, the potential for reward in this digital frontier is immense, and those who are brave enough to venture into it could stand to gain a great deal. On the other hand, renowned economist Nouri al-Rubini warns about the inherent risks. He points out that while the rewards may be high, so too are the risks. The volatility of Bitcoin's value and the energy-intensive nature of mining can make it a risky endeavor. Meanwhile, industry expert Andreas Antonopoulos emphasizes the technological impact of Bitcoin mining. He states, Bitcoin mining isn't just about creating new wealth, it's about validating transactions and maintaining the security of the whole Bitcoin network. Finally, we have the perspective of Jihan Wu, co-founder of Bitmain, one of the largest Bitcoin mining companies. He highlights the potential for wealth creation, but also reminds us of the significant investment required. He says, successful Bitcoin mining requires a significant investment in hardware, energy, and time. As we can see, Bitcoin mining is a complex field with diverse opinions. The potential for wealth creation is undeniable, but so are the risks. So, what exactly is Bitcoin mining, and how does it contribute to wealth creation? Imagine a giant virtual treasure hunt where the prize is a shiny digital gold called Bitcoin. This is the essence of Bitcoin mining. It's a process where powerful computers, also known as miners, compete to solve complex mathematical problems. The first one to crack the code gets rewarded with new Bitcoins, hence creating wealth. But the treasure hunt analogy doesn't stop there. Just as gold miners use picks and shovels, Bitcoin miners use high-powered hardware to dig into the virtual ground. The complex mathematical problems they solve are like the layers of rock and earth that stand between them and the precious Bitcoin ore. Now, these mathematical problems aren't just arbitrary hurdles put in place to make the treasure hunt challenging. They serve a crucial function. Every time a problem is solved, a new block of transactions is added to the Bitcoin blockchain, a public ledger of all Bitcoin transactions. This process validates and secures every Bitcoin transaction, preventing fraud and double spending. In this way, Bitcoin mining not only creates new Bitcoins but also ensures the integrity of the entire Bitcoin network. What's more, Bitcoin mining has revolutionized wealth creation. Traditionally, wealth was generated through physical labor or ownership of capital assets. But with Bitcoin mining, wealth can be created digitally with the right hardware and enough computational power. This shift has opened up new avenues for wealth creation, making it accessible to a wider range of individuals and organizations. Over the past decade, Bitcoin mining has evolved from a hobby for tech enthusiasts into a major industry. It's attracted significant investment and attention, and has been instrumental in the rise of Bitcoin as a digital asset. So there you have it. Bitcoin mining is more than just a digital treasure hunt. It's a critical process that drives the Bitcoin network, secures transactions, and creates new Bitcoins. In essence, Bitcoin mining is the heartbeat of the Bitcoin network. It's a digital gold rush that has the potential to create immense wealth. Now, the million Bitcoin question, can Bitcoin mining make you rich? The simple answer is yes, but it's not as straightforward as it seems. Over the years, numerous individuals and companies have made substantial wealth through Bitcoin mining. Early miners who started when the difficulty of mining was relatively low and the rewards were high are now Bitcoin millionaires. Take the example of Genesis Mining, one of the largest cloud mining services, which has been generating Bitcoin since 2013. The company has grown exponentially, amassing wealth not only from mining but also from selling mining contracts to other miners. But let's not forget, with great potential comes considerable risk. Bitcoin mining is not a get-rich-quick scheme. It requires significant upfront investment in powerful, specialized hardware. Moreover, the cost of electricity to run these machines can be exorbitant. Then there's the volatile nature of Bitcoin prices. A sudden drop in value can turn a profitable operation into a losing one overnight. Also, as more people join the mining race, the difficulty of the mathematical problems increases, meaning it takes more computing power to earn the same amount of Bitcoin. The potential for wealth creation through Bitcoin mining is immense. However, like any investment, it comes with its own set of risks. As always, do your homework before diving in. Let's quickly recap the wealth creation potential in Bitcoin mining. At its core, Bitcoin mining is a mechanism where miners validate new transactions and record them on the global ledger, the blockchain. This ledger keeping is rewarded with new Bitcoins, along with transaction fees paid by users. This lucrative incentive keeps the Bitcoin mining community motivated. The diminishing rate of Bitcoin rewards due to halving creates scarcity, inherently boosting Bitcoin's value and compelling miners to remain committed long-term. Additionally, as Bitcoin's value rises, miners who hold on to their mined Bitcoin stand to benefit from significant price appreciation. The spread of Bitcoin nodes worldwide provides a robust network, maintaining Bitcoin's decentralized nature and appeal to investors skeptical of heavily regulated financial systems. In conclusion, Bitcoin mining offers a wealth creation opportunity with potential for significant gains, but it requires a deep understanding of its operational intricacies and effective risk management. Remember, it's not a sprint, it's a marathon. So, before you dive in, make sure you've done your homework.